Hi, everybody. This is the Physics of Bitcoin show. I am here with my co-host, Stephen Perrineau. I'm Giovanni Santostasi. Like always, and this episode, I'm losing track, 29?
29.
29. It's incredible that we already did 29 episodes. Wow. And look at this. I am coordinating with my shirt and my...
I'm coordinating with the new high.
Yes. Happy new Eye, everybody, by the way. That it was an exciting day. And you were telling me that we reach actually the market cap of Google, Stephen?
We are presently at a higher market cap than Google.
Amazing.
And so there is only gold, NVIDIA,
Yeah.
Microsoft, Apple, and then it's Bitcoin.
Wow. Very nice. So, again, very short introduction. The show is all about, the life experience of me and Stephen, where, we started as pure physicists, in particular in the field of astrophysics. And then because of our life experiences, our working experiences, we went to different fields. And I went to neuroscience, Stephen more in the computational side of things. And we apply our tools from physics, our understanding, particularly this way of thinking about physics that is all about foundation. It's like starting from first principle and building up an understanding of whatever field we were working on. And it's something that paid off. In my case, for example, I got a patent within 1 year joining this new field of neuroscience. And same thing with Stephen. He has been very successful in his field. And then, we had the same idea of doing, this thing with Bitcoin, studying Bitcoin from a scientific point of view, in particular from a physics point of view, and looking for patterns that made sense from this perspective. And of course, everybody that follows me is familiar with my discoveries about the scaling property of Bitcoin, the power law. But while that is one of the core topics that we discuss, it's not the only one. We also look at other topics from physics, different tools that give us deeper insights. And it's really cool because I know that sometimes it's difficult to follow what we discuss. I suggest everybody to watch the episodes, maybe slow them down, looking at the charts. If it is possible for you to reproduce some of the results, is even better, because the best way to learn these things is actually for you to reproduce them. But it's really worthwhile because I think it's one of a few shows where we actually, instead of repeating basically the same thing, where we look at these indicators and we just give an update, we actually are exploring new things that were never discovered before about Bitcoin. Almost every single week, it is really amazing, that we are doing things. Maybe sometimes small contributions, but they're new results, that are unique. So it's a really a powerful approach that this shows up. Anyway, so Stephen, what you want to add anything to this?
No, I think we're both motivated by doing fundamental research into the nature of Bitcoin. And it's not just what it's doing, but why it's doing that.
Exactly. And by the way, we're not ready yet for the full announcement, but I have mentioned a few times we are building up towards creating an institute, because one of the goals of the institute will be exactly this, doing this exploration, but there will be some educational components, but also it will give an opportunity, a platform for other people that want to contribute to this. So, you do science as teams and as a community. So if you would like to join us and contribute, it could be a donation, or it could be your time, it could be an intern. I'm very interested in mentoring and teaching. So if people want to join us, we will be very open to all these activities. But Stay tuned. We are not ready. We are doing all the basic work to prepare the institute, and then we will let you know when it happens. When that happens, actually, this show will be part of the activity of the institute. It will be under the auspices of the institute itself. Anyway, let's go ahead. Stephen has very interesting results. Again, new discoveries that he did about Bitcoin. Do you want to show your agenda, Stephen?
Okay, here we go. Indeed, this is number 29 session. And today I want to focus on bubbles and mini bubbles, and coming at that from two different aspects. A little quote from Francis Bacon: knowledge is power. We're trying to elucidate the energy and power in Bitcoin. That's our knowledge domain. So the agenda is about mini bubbles and crashes and bubbles and crashes. So I'm going to look at the bubble structure from two different methods, one of which does not take into account, the first of which does not take into account the power law, and the second of which does. And I got onto this because I wanted to think about breaking down the bubbles. What's the structure of them? Are there mini bubbles? Because we know when we look at the log periodic power law, which is different from the long-term power law, but it is appropriate to describing shorter term to intermediate terms, namely bubbles and crashes, that there are impulse waves in those. So that got me thinking about what's the mini bubble structure within the big bubbles that we see in Bitcoin roughly every 4 years. And so I've looked at these in the past in terms of their energy and duration and how that develops over time. And this is, again, relooking, but two additional methods. And again, the first one does not, that I'm going to show you, does not take into account the power law. And we look at as well equally at the anti-mini bubbles or crash impulse waves. And then I'll get into the second method of looking at bubbles in a power law aware fashion. And what we find is that the mini bubbles kind of evaporate, that everything just kind of sort of looks like larger bubbles. And I'll explain why that is. I'll look quickly at the global liquidity growth and how that correlated with the mini bubble method. And it's consistent with our work when we did Granger causality look at global liquidity in terms of time lags. And then I'll look at Bitcoin Bubble 2025, the latest, and master or strategy in terms of the log periodic power law and what's that showing. And there's something rather interesting and surprising there. Okay, so this is a chart that's showing with these stripes, these yellow stripes, 31 mini bubbles. So these are only the upward bubbles, not the crashes. And you can see that there's steep components or impulse waves inside the major bubbles, which I will remind you were in 2011, 2013, 2017, and 2021, typically towards the end of those years. So that structure within major bubbles. These are defined without considering the power law. So what I used for a filter was that the velocity, the speed of the rise, was at least 0.003 in log price per day, and that the duration was 15 days or longer. And that would amount to a 23% increase in a month as a threshold if it went on for a month. So it means that the minimum bubble is about 11% move in price. Again, 31 of these since mid-2010, and the average number of them has dropped, as you can see just looking at that. That X marks the midpoint, so that half of the bubbles are before that X at the bottom of the chart and half after. And the average number dropped from about 3 per year to 1 per year. So we're seeing the number drop, but also the energy in those drops. So this is the chart of the 31 mini bubbles and their energy. And so it's taking, with that filter, it's taking the total energy in the mini bubble It's the log of the price changes counted per days times the number of days. If we can fit it to a reciprocal function, it's not a very high R squared, but it's a decent R squared for lots of work. And so there is a trend that it's falling off linearly with the age roughly. And we see it very clearly in the peak values. If you just look at the peak values, at 2 years and around 4 or 5 years and 8 years, and you can see a very sharp decline there. And I've shown one large bubble here, the 2013 large bubble, and it's got 8 X's inside. So those 8 X's are the mini bubble components of that. And the little chart down at the lower left shows those, and you can see how much energy is in those. And the largest ones have energy like 0.5, 0.5, 0.7. So those are the 3 up at the top. And just so you get a feel of that in linear price, if you're at 0.6, and I'm sorry, it's a little bit offset on this chart, but if you're at 0.6, that's an increase in price by a factor of 4. And if you're at 0.3, that's an increase in price by a factor of 2. So we only had 6 that moved more than a factor of 3 in linear terms in the early years, and none in recent years. And this shows the mini bubble power, which is just the average power versus the age. It can also be fit by a reciprocal with similar quality of fit. It appears perhaps that it's asymptoting to not of extremely high value in those. And here's the duration. Although visually we see that it's coming down and there is a reciprocal fit here, it's quite weak. And so it's a little hard statistically to say that's happening. But if you look at the maximal X's here, those are definitely coming down.
What is the current duration right now?
We're not in a bubble right now, but it's
I know latest values.
I'm sorry, what's the question? How many days? Well,
I was looking at what was the average.
15 days is the cutoff. So there's a lower bound of 15 days.
Right.
So, we're close to the lower bound of the cutoff. We're in the 2 to 3 week space for these mini bubbles. Okay, these are the crashes or the anti-mini bubbles. There have been 23 since mid-2010. That X at the bottom shows the midpoint. So again, there were more in early years than there have been now. We haven't had any since the beginning of 2023 that were, significant to meet the filter. And it's the same filter, just in the opposite direction. The average energy represents a 29% drop, or minus 0.147 in log 10 terms. You do see that they tend to cluster. You see very strong cluster after the 2011 bubble, and you see good clustering after the 2013, 2017 bubbles. And the clustering kind of fades after the 2021 bubble. It's not as sharp. This is the energy fit. It's not a good fit. The R squared is only 0.07. There's still some downward trend. Certainly at the maximum envelope, there appears to be a downward trend. And so here at the top of it, if it's a 0.3, that means the price was cut in half. And if it's a 0.15, it fell to 0.7 of the prior price. So that's down by not quite a third.
Why do you think there is this asymmetry?
Which asymmetry?
Between the bubbles and the anti-bubbles. Why the other one had a precise pattern and this one doesn't?
There are multiple asymmetries. Which one are you referring to?
I'm talking about the fact that you see a clear pattern in the decay of the energy, while this one doesn't have.
Oh, and why we don't see it here?
Yeah,
I don't know. I think probably because this is, we're very highly skewed right tail with Bitcoin, right? And so the bubbles have a wider distribution, whereas these, when they fall, they're coming back to the core power law.
Right.
And so I think that's probably the explanation, that the core power law is, how should we say it? It's an attractor for them, right?
Right.
That they're really trying to come back to the core power law. And I'm going to show some evidence for that.
Yeah.
Mini crash power, the same thing. Not much of a fit there at all.
Yeah.
Now, so what I did was I aggregated those 31 mini bubbles and the 23 mini crashes. So this doesn't have any of the trend data. 80% of the data is in the trend, or 78.5% is in the trend. 13.9% of the time was spent in these mini bubbles. 7.6% was in the mini crash. So together, 21.5% of the time was spent in these mini bubbles and mini crashes. And this aggregates only those. But it uses their original time steps, or time stamps. So it locates them at the particular time, and it shows how much the energy changed up or down. So you get this stair-step pattern, and that's the blue line. So this is how the log price proceeds if you only consider that 21% of the data. And I fit it to both ordinary least squares and with quantile regression, very good R squared, 0.93 in each case. And the power law index is 5.
Right.
It's 5 or 5.1. So these bubbles and crashes alone are behaving in a power law fashion.
Yeah. Scaling properties.
Yeah. And that's without, using any power law fit before, or, using the residuals relative to a power law. These are just absolute residuals. Okay. And then you can also ask, for this set of data, this 21.5% of the bubbles and anti-bubbles, if I measured the power law at any one time amongst that complement up until a certain date, what would I measure? So initially it jumped up to about 12, and the blue is an ordinary least squares slope, and the QR slope is in orange. But after the 2011 bubble, it fell back down below 6, and with the 2013, it moves up again some. But as you can see, it dampens down, and it becomes pretty flat by age 6 or so, and trends right to 5.5. So then I went on, and actually I think it trended to 5.1 in that case. So what I did was I shuffled these. So I ran I randomized the orders of these bubbles and crashes. So it's the same log energy data, but you randomize when they occur. And on the left, it's for 10 realizations, and the mean slope was 5. And then I shuffled 100 realizations, and the mean came out to be 5.6 for the power law index. It represents that full 100 realizations in the mean.
Tell me what you had in mind by why do you want to shuffle them? To see if there is some kind of organization in time.
I'm looking for an intrinsic power law nature, right?
Right.
So I'm trying to see if it doesn't matter when they occur.
Right.
Is what this is saying. So, I was looking for, is there order dependency on this? Because you think, well, the early ones were bigger, so they carry more weight, and how much does that change things? And it's a fairly wide spread, but the standard deviation is 1. So you end up with a 5.6 power law in the mean, which is very, very close to the overall power law, for the entire Bitcoin price history.
Right. Yeah, because in the end you're fitting first and last, right? And so it's really the end result that matters, right? It's where you started and when you're ending.
Yeah, but you're not fitting first and last in the same sense, because all you're doing is you're taking how much energy went in, how much energy went out,
Mhm.
and you're shuffling that, and you're doing a regression through that. You're not picking the first point and the last point.
No,
But
but
obviously,
you're calculating the aggregate, right?
you're
So it's
calculating the
really
aggregate, and it's obviously gone up more than down, right? There's been more and more
right.
energy going in than down.
Yeah,
So it's going to slope upwards. But the idea that it comes so close in the mean, to the 5.8 that we see for the total trend is pretty interesting.
yeah. I think it has to do with my least action principle studies. It's something like that, right? Because it's basically like the extreme case is kind of average down, right? I mean, average out because you have some of these extreme cases up, some of these extreme cases down. And when you look at the average, then they simply cancel out and you get what is really the path of minimal resistance.
That's right. It was actually your statement about that that got me thinking and led me down this line of path.
Yeah. I think
Of
we align now. Yeah.
Yeah. And I was trying to think in terms of Lagrangian and impulse wave energy coming in, and I got a little wrapped around the
Yeah.
axle, so I
So
simplified it. But this, I think, supports it.
yeah, all the people that say, "Oh, it's just some feat, arbitrary, whatever," they don't know what they're talking about.
Yeah,
Because this is real physics. This is real physics.
this is real physics.
Really, it's telling us that it's something that has to do really on how these events organize themselves, and it's a very scaling principle all over the place. It's very clear.
So if we say that Bitcoin spends 80% of its time in the power law core trend and 20% of its time in bubbles and crashes, reasonably large ones. And I'm kind of deprecating to some extent the fact that you have these long bubbles and long crash periods, right? I'm saying basically it's more like an 80-20 in this view, although I'm going to give you a different view in a moment. But if you say that, then both the 80 and the 20 are adhering to essentially the same overall power laws.
Yeah.
Okay, second method. Now I want to look at the bubbles after subtracting the power law first. And we've done this before in a number of different ways, but this one is also slightly different. I look at residual thresholds in terms of log 10 price. So that's a normal way of doing it. I put in a 10-day minimum duration requirement. And if there's a gap between two events, I just merge them into a single event. So you see the price, you see the trend only, which is the orange line, and then you see these triangles. Now, these triangles are approximations to what are now the big bubbles, or mostly large bubbles and some smaller bubbles. The way the triangles are drawn is to only represent the energy and duration above the threshold. So that threshold might be 0.3 in the log 10 price, and then there's some duration as to when it was that far above. So if you look at the lower chart, that becomes a little more clear. It has the power law trend subtracted out. So we're looking at log residuals versus time. You see the triangles. The triangles do not represent from 0 up to the peak. The triangles represent from the green dashed line, which is the threshold, up to the peak. But they're drawn for clarity at the 0 line to separate visually.
Mm-hmm.
You don't see many bubbles too much here. you see a handful, but you don't see 31 bubbles. It's more like order 10. And this is with the threshold at 0.3. Now, 0.3 turns out to be roughly the average standard deviation over the whole price history. This one is a 0.2 threshold, and that's more similar to the standard deviation in power log 10 terms since the past 5 years, during the past cycle and into this cycle. So it looks similar. The number of bubbles doesn't change much, but we see a lot more mini crashes here, or small crashes. And then I ran it at 0.15 and 0.25. This is the 0.1. That was the lowest I went. Same rules otherwise, but the threshold at 0.1.
It's a really cool idea.
Now, it's interesting. If we look back, here's the first one, 0.3. There has been no bubble since January 2023. And there was a crash right at the end of 22, a small one. And then if we look at the 0.2 threshold, no upwards bubbles since mid-2022, but a number of crashes of small to modest size. Because we had that big trough in 2023. And then at the lowest threshold, even at the lowest threshold, there's been no bubble up since mid-22. And this data extends through the end of July. So maybe we're getting close to that line now. That line of 0.1 threshold is 1.26 in linear terms. So if your trend value is 100,000, 126,000 would be the trigger. This used a QR, and actually the QR best fit in my reckoning is more like 93 to 95,000. So we're around that level now. Okay, this table shows kind of a summary with thresholds 0.3, 0.2, 0.15, 0.1. It shows the linear factors are 2, 1.58, 1.4, and 1.26. So you have to get above that just to hit the threshold and to be in a bubble. At the 0.3 threshold, there were 9 bubbles, but as you change the levels, it didn't change. It went to 10 and 8 and 9. And the reason is that the little bubbles would merge. The anti-bubbles were only 3 and then jumped up to 14 and then stayed pretty constant. Of course, the bubble energy went up as you lowered the threshold. So it more than doubled. And the anti-bubble energy went up dramatically as you lowered the threshold. So why do the bubble counts don't steadily increase? Because you're merging events and the minimum run length might capture more days, but that makes it more likely to have a merger. But you do get this overall trend in growing the amount of energy. So the high thresholds isolate the fastest and largest rallies, and the low thresholds will capture shallow pullbacks and rallies and inflate the total energy. The asymmetry implies that the under trend periods are longer in duration than the above trend surges. And this chart with the white background shows the bubble energy with the green line falling as the threshold goes up, and the same with the anti-bubble energy. And then the number of bubbles, pretty flat, is the dashed line in green. And then the anti-bubble, it stays high and then it drops when you put the threshold high. So again, 0.2 level here is similar to the current standard deviation and volatility of Bitcoin. Okay, before I move, any thoughts or comments?
So the light green and light red are pretty symmetric this time, right? Well, Yeah.
They're,
Not completely, but
no, they're not. Yeah.
at least in shape. But
Yeah.
they
Similar
can,
shape.
yeah. But
Yeah.
there is more energy up than down. Yeah.
Right. Of course.
200
Right.
is almost like a kind of a reference level. So if you use 200 as your reference level, then they look symmetric.
Right.
200 positive, yeah.
Yeah. Yeah. So there's triple the energy in the bubbles.
Yeah. But they seem to decay in a similar fashion.
Yes.
Okay.
All right. Now, this is using the first technique, the first method with the 31 mini bubbles. And it's using a machine learning algorithm called random forest in order to examine the liquidity lead lag issue. And as I did before in some previous presentation, I used the M3 numbers OECD. So that's 30 some odd developed countries, their broadest money supply. And I used the year over year growth. And we also look at the deltas, which are just the 1 month changes in that year over year growth, or it's just the one month percentage changes. And so this technique creates mini decision trees, samples, subsamples, takes random sets, and tries to find out how much influence do you have with different lags, with different number of months. And lag means that the Bitcoin bubbles would be lagging behind the OECD M3 liquidity. And so it shows how much weight is in each of those. And the first 3 bars, the highest ones here, represent 4, 5, and 2 months of a lag, where a lag is essentially Bitcoin lagging behind the global liquidity.
Right.
Half of the importance is found in year over year liquidity growth with lags of 1 to 5 months, and the weighted mean is 3.5 months. So again, this is 1 quarter roughly, and this is similar to what other people have found in terms of the relationship. Michael Howell and others, that it's roughly 1 quarter. Some people say 11 weeks. Some people say 10 weeks. Some people say
I found that in my study I did 85. That is about 3 months. Yeah.
Yeah. Okay, so then that begs the question as to where are we now? And this is the OECD year-over-year growth plotted, taken from the Federal Reserve site. Unfortunately, the latest data, it takes a while for this data to come in, is February 2025. You can see it's been rising since late in 2023. It was actually negative back then. It was very weak during 2024. It only reached 4% last December. So now it's the latest, it's at 4.1%. But if you have a 3 to 5 month lead, then that gets you into June and July. Is it having an impact? And so based on the price history that we've had, that registers with what we've seen.
Yeah.
And we'd like it to get up to 7%. It's trending up. All the expectation is it's going to continue to trend up, not just for the US, but China and others.
Mm-hmm.
And that dotted or dashed line is at 7%, where I've shown it triggers large bubbles in the past. Okay. This is an analysis of strategy using the log periodic power law. Where do we stand in terms of the bubbles or the waves within the larger bubble structure for master MSTR?
Right.
The fit on the right is one I did with ChatGPT 04 Code Copilot a week or so ago. And the one on the right is one I did a day and a half ago with GPT-5. Quite different results. The GPT-4 said that, we'd get up in the 400 plus range and that the critical time would be in mid-October. And you can see that it's kind of got 3 waves in there and expecting a 4th wave. It's the same data set. I didn't change the data sets. They're exactly identical, weekly prices, going back for a little over 2 years. However, GPT-5 is forecasting June 2026. And it has a lot more waves yet to come. And you can see that from this omega parameter, which is the angular frequency here. It has a value of 18. And the first order, it roughly represents the number of waves as well. And so you can see maybe there was an initial wave, 1, 2, 3, maybe we're in the 4th wave. And you can see ahead at least 8 or 10 waves potentially. And a lot more time to run, and a scale that takes you up 1 week prior to the critical time in June to $1,200. Wow. So why they're giving such different results, I don't know the answer to that yet, but that's worth exploration. And obviously we want to keep updating this and see how it develops. It looks like it's done a better fit to the wave nature, just looking by eye. Yeah. So that's part of it. That caused the omega parameter to go up by making those tighter, essentially, increasing the frequency. The first one wasn't really capturing them best, so it was not in sync in frequency domain terms.
Right.
So that's interesting. We'll see how that develops. And then there's been a lot of focus on Master's financial engineering with their new product, the STRC that's out. And this tweet from Saylor, he called Master Amplified Bitcoin, leveraged Bitcoin straight, if you will. STRK, structured Bitcoin. It's kind of what we call in the marketplace a structured product. It has this convertibility feature, so it's got this upside tied to Master equity. And then STRC is like a money market fund that pays high interest, but it's underpinned by Bitcoin. And then I asked, actually, this is GPT-4. I asked, okay, what's going to be the growth rate for these over the next decade? I specified the BTC growth based on the power law. So that's 32% expectation. And I said, given that, if we assume a 1.5 beta for Master, what kind of growth would we get? Well, not surprisingly, it's at 47%. STRK, it estimated 25% or better. STRC, 12% or better. Now, I threw this question at GPT-5 yesterday, and it was all over the map. It gave me more conservative results, but it gave me 3 different cases, bull, bear, base. I haven't presented those. I haven't had enough time looking at those to figure out how much sense they make. These seem reasonably sensible to me.
So if I just calculated that if you take, let me see. Do you remember we say at a certain point that a model for a strategy relative to Bitcoin is to take the power 1.3. So if you take 1.3 of the power on the 3 of 31%, you get 43%. But it's kind of close to his 47.
Kind of close. But I have a question about whether that model is holding up, because I reran and
it's holding up until recently, but now, it's a small deviation now. I can show you if you want.
It's come down. Yeah, maybe you can show after I wrap up here shortly. Yeah. I redid the Kelly analysis. If you just had a 2-asset portfolio with Master and Bitcoin, if you do quarterly rebalancing, it argues up to 30%. Master won 55% of the quarters lost 45% measured in Bitcoin terms. And the ratio of the wins to losses is a 1.8, where Master outperformed on average over this. This is the full history over 5 years since they, this is the 5-year anniversary of when he adopted the treasury company strategy. And so the F value turns out to be basically 55 minus 45 over 1.8. That's 30%. Now, if you put it into a continuous Kelly, it would be even more positive on Master, but I kind of like these more conservative numbers. Okay, I'll close it out there. One thing more important than Bitcoin this week is oxygen. So yes, we're at new highs, but don't forget to breathe.
Right, absolutely. The truth always turns out to be simpler than you thought. Yes, this is what nature likes, simple things. Yeah, so first of all, let me share that model. So this is a model for MicroStrategy where I see a power law. Now, one has to, I don't know if when you look at your model, you consider this, you have to, because what happened when everybody was going crazy, I don't know if you remember, this was, let me optimize this, how do I do it here? Okay, so this was, do you remember when we started to go up in November? Everybody went crazy. Basically, for some time, MicroStrategy went exponential because you see
Right.
this is like a straight line in a log linear chart. And I was telling everybody, this is not sustainable. It's absolutely not sustainable. Don't think that this is what MicroStrategy will do in the future. It will not follow this straight line. Something needs to give. And if you actually calculated the log periodic power law, it was actually predicting that we were going to have some kind of correction. And so the way that, because the model worked really, really good. Like, look at this. See this, the blue line is the real price. Of course, if you go early than August, it doesn't match, right? So the red is the model, blue is the real price. So you can see, because I'm using the origin, right, to to do my fitting. So it's assuming that basically MicroStrategy was linked to Bitcoin from 2009, but it's not the case. But this is how you build your model. But it works pretty well after MicroStrategy started to use to buy Bitcoin. It is, August 20, 2020. And you can see it's a pretty good model, right? It fits very well. And all what I'm doing is taking the power of 1.3. And now here we started to see that huge deviation because there was a lot of speculation. People were playing all kind of crazy games with options, etc. And so I had to introduce a factor of 2. So I basically, it's like a jump. This is why you see this jump. I say, okay, after this date, just introduce a factor of 2 in recalibrating. It's still the power, but now I use a multiplier of 2 starting from here, from November 24. And then you get again a good match. And it's good up to July. And it's I have to move this this tag. It's programmatic because it covers kind of the price. But if I zoom in, you can see starting in mid-July, we started to deviate again, where basically, MicroStrategy had a huge big correction down. Now it seems even anti-correlated. Bitcoin is going up, the strategy is going down. If you use a model, So the real price right now, it's close to 390. If you use the model, the expected value should be more like 490. It should be all the way there.
Mm-hmm.
So I'm not sure if it is a temporary thing or the model is broken, given that it is only the deviation started to be big only since July. I'm expecting that this is just temporary, but we will have to see. Do you have any question about this?
No, I mean it's clearly relatively depressed. The MNAV has dropped a lot, and not sure exactly why. I expect it to rise again, but
yeah.
Yeah.
Let's see. Okay, the other thing I did is similar to the work you did. Let's see if I can find the picture. I think this is it. So I did log periodic power law calculations, but instead of, so you use weeks, right? From what I understand, that is your.
I used weekly, yeah.
Yeah, let me actually make this picture a little bit bigger, so you can see it better.
Yeah, you got the same TC.
What was your TC?
Mid-September. It was 16th. I showed in the last show.
Yeah.
And it was the 16th of September.
Correct. Yeah. So we doing it daily, and you can see it's a pretty decent fit, right, to the price action. Looks pretty good in calculating the. But what really is important, it's the timing of these waves, right? Because the entire theory behind it is that there is kind of a sequence of waves that are accelerating, the length of these waves, you see. So for the people that are not familiar, right, we explain it very many times, but just let me summarize it very quickly. So the idea is that according to the theory, this comes from studies from that were started from this by this physicist called Didier Raisonnet, a French physicist, and he observed things like this when he studied earthquakes. And if you look at vibration of the ground due to earthquakes, just before a big event like a big earthquake, he started to see that the vibrations accelerated in terms of time, right? So when you look at waves, right, the length of a wave, which is called a wavelength, usually you measure it from peak to peak, but you can look at alpha of a wave here, for example. So peak to bottom, for example. Notice these wavelengths are becoming smaller. So that means the frequency, so how fast these waves are happening, is increasing. And they follow a precise pattern. You can write an equation. It's more complicated than that. For example, Stephen was talking about 7 parameters. These parameters are trying to fit all kinds of things, like, for example, the slope. So basically, before the big event, the local data looks like a power law. So we're not talking about the long-term power law, but just the local data. The local data seems to follow a power law. That is usually a sign, an indication of criticality. We observe power laws when there are critical phenomena, and then you can adjust the amplitude of the waves, all kind of things. The problem, like always, we explained this many times, if you have anything that has more than 2 or 3 parameters, and you're trying to look for specific parameters to fit something, it takes a long time, but eventually you will find something that fits. And it's problematic because you don't know if it is a signal or just noise. Are you fitting the noise? Are you fitting the signal, right? And people have studied these things long enough to say, yes, there is a signal, but there are certain criteria on what qualifies a signal. You have one of the things you notice, for example, as you get more and more data, you are doing this fit over and over again, there is convergence. As you add more data, you still get similar answers. So it means probably it's not noise, it's signal. So, but we should take this with a grain of salt. But if you take this with a grain of salt, the way to interpret this is there are these oscillations that seem to amplify. The theory applied to the market is that basically, even if we are not aware, because many people think that humans have a free will, etc. Maybe we have free will at a personal level, or at least some level of free will. But when we work as aggregates, we became like sheep. We start to be basically like particles. And in fact, there are this category of particle called bosons that basically became like, we like to march together. We like to work together. So because actually, Stephen, that is something that Seyfedin say one time. He had an interview with with I don't remember if it was Rogan. No, maybe it was the other guy with his his name, Lexman, the other interviewer, the famous interviewer, and he was saying that people are not particles. Well, they are particles, and we even know the type of particle that they are. Right? They are bosons. They like to because there are these two particles. There are some fermions. They don't like to be together. They don't like to do things together. And then there are bosons like light, for example. This is why you can have laser, because you can force light to march together and do things in a very coordinated fashion. And humans are like that, in particular under situations like this, where you see this price action, the price start to become, people get excited, price start to go up, they started to coordinate their behavior. This is something that is not done consciously. It's an unconscious behavior due to all these interactions, indirect interactions that people have, and they start to accelerate their behavior. They are becoming kind of almost like a frenzy. They are doing things faster and faster and faster, to the point where if you extrapolate this to the future, the oscillation becomes so fast that are unsustainable. They are happening at the level of maybe less than a day or something, and that leads. The idea will be that theoretically, you can extend this oscillation forever and become faster and faster, but at a certain point, we are so basically unphysical. They are not mathematically they can be faster and faster, but physically they cannot. The system will break. And you can calculate, we can extrapolate when that is going to happen. And basically, that is the red line. So the green and yellow line is basically the kind of like a alert region, right? So this is where things are starting to be faster and faster. And then there is a line here in this graph that predicts when the critical event happens.
What defines the green line?
It's like one of these interest windows, right? It has a maximum window and a minimum window. That is a minimum window where, and then the code is looking for nested windows, like if there is convergence over the entire region. So there is a maximum window. If you can choose like a year or something, and then basically is recalculating over smaller and smaller windows. This is the smallest possible window when it's recalculating these oscillations. And if there is convergence, right, they are basically like nested windows. And if results start to look similar over these nested windows, then it's an accepted critical event. Because there are many, many candidates, and you reject things that don't converge.
But that just looks like the last cycle definition up until the present data, right?
Right, exactly.
Right. Okay.
Yeah, it's a minimum possible oscillation, right?
Yeah. Okay.
And it seems to converge with all the major other windows that the algo considers.
And what price forecast did this give slightly ahead of the critical time?
I don't think I can calculate the price unless I actually show the projection, and I don't show a projection here.
Well,
It's
what
just
you would typically do is pick like 1 week or 2 weeks before and then calculate the
right.
price there.
Yeah, I mean, you can see. Let me see if I have a graph that goes that. I can modify to do that. Um, Let me zoom out from here. Yeah, now this particular one stops here. Usually you can extend and see where it goes. I didn't do that extension. But even if you, I don't know. Yeah, I will have to. I don't want to say something correct. I'm going to redo the calculation to tell you maybe next time.
Okay. Well,
Where if
what
you,
I
but
found was a price of 131K on the
131K.
2nd of September.
Uh huh.
Um, it had a critical date of 16th September, so I picked 2 weeks prior.
Okay.
However, I got different results depending on whether I used 1.5 years of data and 2.5 years of data. And it was daily data that I ran for
Okay.
Bitcoin itself.
So we are
Yeah.
kind of converging in the same idea that basically there is going to be some event mid September, beginning September, maybe anything between. It's always a window, right? It's a probabilistic thing. It's never an exact date, but it's still amazing that we can make a prediction of that. So we are saying that if you take seriously this model, sometime in beginning of mid, let's say mid September, maybe some kind of big correction. Is that the top for the cycle? Maybe not, but it's going to be some kind of a correction before maybe we have a top. But something is going to happen at that date. It seems so. I will try to do a calculation for the size of a peak. It should be. I need just to project to the future this blue line, and right now I'm not doing it. It knows that this is how it finds out that there is some problem there, right? Because it starts to be too fast. But I
Right.
didn't draw it. I will draw it next time. I want to eventually. I want to do, and it could be a service of a institute. We should have a web page where these pictures are updated on a regular basis,
Mhm.
and before the fact, because I posted some that were after the fact that people told me, oh, okay, sure, you did it
Right.
after the fact. But the algo doesn't know that you're doing it after the fact because it's always uses the data up to a point and then it makes a prediction. And I can show you some of the prediction because I have an entire catalog of them. It was able to find some of the corrections like the one we had in July, for example. Um, yeah.
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 I found that there would be peaks towards late July and late August.
Mhm.
And we saw the late July, so let's see what happens. But late August, but then another climb, above that.
Yeah. So and it's pretty powerful tool. So it will be nice to have some kind of monitor that is live. The main problem is when you have all these candidates to select the ones that are actually see, for example, this one. I can show you this one. The one that are actually that go through the filter. So let me show you this one. It's interesting. And again, this is after the fact, but remember, the algo doesn't know that. Is this, let me see, 11, this one. Oh, Okay. Share. Yeah. No, I'm not. It's not what. Let me close this one. Just a second. I have dozens of these candidates. Okay. All right. I think I found it. Okay. Let me try again. $211. Yeah. Yeah. So this one, and let me make it a little bit bigger. Okay. Yeah. You see this one. In this case, I actually show the projection. I think I wrote the code where it shows the projection if we have data. I should tell it do also the future, right? Because here, see, this is what happened, right? This is how I wrote the code. It start to do the calculations up to the last day, so today. But if it is as still data left over, it will show you both the prediction and really what happened. If it doesn't have real data, it doesn't even show you the prediction, and it should not do that. Like if we reach the last day, it should show you the prediction, even if we don't have future data. But the algo just uses past data. It doesn't use future data, just up to that point, right? And in this case, it clearly says, in this case, this is one of these convergence things. Like if you see the picture before, it started to predict this. But this basically is running the bell the day, kind of few days before there was this major correction here. And it says that this is unsustainable, there will be some correction, and it was right? We had this correction. Yeah. This was July 25th. And then, a few days later, we had a correction. It was not major, but it was a correction. Yeah. We went down. So there's multiple of these corrections, both up and down. You can also calculate, you can also predict when we go up. Not always, right? Not all these major moves are seen by the algo, but it has a pretty good, it's pretty consistent. So it will be nice to have like some kind of observatory where, people can go and find these graphs, some kind of maybe based on some probability levels, say, okay, we are going to have a correction, a critical event in the next couple of days or whatever, It would be interesting to do that in an automated fashion. The problem that is becoming, right, if you want to include a lot of data, like up to several years, it takes forever to do the calculation. How fast is ChatGPT usually when you do these calculations? Stephen?
Yeah, I've used daily data starting from the beginning of 2023 because that's when the last bottom was.
Mm-hmm.
And then I cut it to shorter amounts of data to see what the variation is. I could share this slide if you like.
Sure.
So this one has 3 different time frames. It's the same data, but one is 2.6 years from the beginning of 2023. And one of the dashed lines is from the beginning of 2024. And then the one that actually fits the best, which is the darker red one, is from the beginning of 2025. Since it has a less time to work in, it's kind of more forced to fit the bubbles well, which it does. And they gave somewhat different answers, but they all gave the same critical date of the 16th of September. And so I asked them what would happen 2 weeks prior in terms of price. And two of these said 130K and one said 118K. So the one that had the longest duration of data and the one that had the shortest duration of data both said 130K. And when I average the three together, it's like 126K plus or minus 5K on September 2nd. And we had this little downturn, in late July. And
Wait,
I
not,
don't have it plotted
sharing.
here, but,
Okay.
but you'd expect another one late August.
But so you're not projecting behavior to the future?
No, I did project. That's what these projected prices are.
No, I know, but not on the graph. Like basically the same thing.
The plot. I think I have. Yeah, I don't have it projected on the plot here.
Yeah, would be nice to do it. Yeah.
Yeah, I have done it, but for some reason I didn't do it here. I don't know.
Yeah.
Okay.
So you still agree? Sometime happens in mid-September, basically. We'll have a major correction.
Yeah.
130. Do you think it's the top, or it's just the local top?
I don't know. I want to have GPT-5 look at it because it gave such different results for MSTR.
Right.
It did a better job of picking out, fitting the impulse waves. So I want to redo it and add the more recent data.
Yeah, and try to do it with days and weeks. Let's see.
I use days for my Bitcoin. Yeah.
Okay.
Yeah.
Okay.
Yeah.
All right. I think we have maybe one question. This one.
That's not a question.
Statement.
That's a desire.
Hopefully it's up to 160. Still kind to 130. We are close. I mean, 130 is now very far away. Right?
Looking at the nature of those waves, I think, it'd be more like 140 and then a fall.
Yeah.
But actually, the thing is, 130 is not the maximum price. It's the price before. So what happens is that as you get closer and closer to the critical value, your likelihood of a crash goes up. So the idea is that the crash is going to occur probably not later than the critical date, maybe some days before, because it's becoming, it's the sand pile that's becoming more and more unstable. Yeah. There's a parameter in here that's the A parameter, and that sort of tells you a maximum price. And that A parameter is around 140,000.
Very nice. Okay. I think we covered a lot of interesting topics, and we reconvene next week. Any concluding remark? Anything you want to add to this?
No. I think we'll want to update this particular one next week, since these
I will try to make some price projection.
Yeah.
In fact, also I will try to do MSTR. We'll try to reproduce some of your results. I think the log periodic power law is something that needs to be explored more deeply. It's a very powerful tool. Okay. All right, then, guys. See you next week.
Thanks,